Amazon.com e-commerce was unprofitable during 2022 with operating income below zero. However, their cloud computing platform AWS was strong last year with operating income at 6.5 billion. This was when the US inflation rate peaked to 8.2%. The annual inflation rate has cooled down to 3% back in June 2023. We can see this decrease in inflation benefiting Amazon as operating income is back in the green thus far at 3.2 billion in quarter 2 2023. AWS operating income has decreased 21.5% between quarter 2 2023 and quarter 1 2022, but still large at 5.3 billion. For the balance sheet, we see current cash position decreasing while current liabilities and long-term debt both increase. New adoption of debt during this economy would result in greater interest, which may hurt margins down the road. According to macrotrends.com, Amazon long-term debt for the quarter ending June 30th, 2023 was 63 billion, a 8.68% increase year over year. During the same period, the Fed fund rate increased to 5.08%. For the income statement, we see gross profit increase from 47 billion to 65 billion. This boils down to net income increasing as well from 3 billion to 6.7 billion. For the cash flow statement, free cash flow was negative for much of 2022. Quarter 2 free cash flow is 5 billion. When comparing free cash flow to market cap, we see free cash flow in quarter 2 2023 is near quarter 4 2021 free cash flow at 5 billion and 3 billion respectively. However, the market cap is 300 billion less now than it was in 2021, even though free cash flow has overall increased from August 2021 to today. Amazon's return on assets, ROA, is at 4%. Generally, I would like to see an ROA over 5%. However, we do see ROA has been improving in the right direction, where the lowest ROA was 1.5%. Return on equity, ROE, is 16.7%, which is desirable and has been increasing since December 2022. ROE was 44% back in quarter 4 21 due to seasonal consumer trends, lower interest rates, COVID increasing online consumerism, and increasing income from AWS. Amazon's market cap is still lower compared to when ROE was 44%. As these returns increase, so may the market cap. In terms of valuation, Amazon is trading at a forward price to sales of 2.2 times, much lower than the highs of 5 times in 2020. The same can be said for total enterprise value to revenue currently at 2.4 times, compared to the 5 times seen in 2020. This can be due to macroeconomic pressures of decreasing benefits in owning stocks over bonds as interest rates move higher. There are also oil fears of becoming $100 a barrel or higher, causing Amazon shipping and freight to cost the company more and decreasing their margins. AI has had a lot of investor enthusiasm for good reason. However, we may see some turbulence in AI adoption as excitement turns into correction. If the annual US inflation rate stays under control, then we may see favorable moves for Amazon as leveled inflation will help their e-commerce. However, we see annual inflation rise back up to 3.7% in August. A catalyst for the stock is CPI data for September, set to be released October 12th. Bulls will want to see the CPI reading to be decreasing. Another round of high inflation would cause operating income of Amazon's e-commerce section to be tightened or be negatively returning, as discussed in the beginning of the video. When zooming in on CPI data, as of August, we see gasoline, oil, and airline fare as the top 3 categories experiencing large increases. These groups are largely correlated as oil is the component in their costs, something to keep in mind for Amazon shipping. I will review the technical analysis piece for Amazon in the next episode. If you wish to see buy and sell signals for Amazon right now, consider checking out Intrendias.com for the Intrendias terminal where you can search your favorite stocks, cryptos, and forex, and buy and sell signals will be outputted to you. This has been Intrendias. Thank you for liking and subscribing, and I appreciate your support. I'll see you in the next one.